Okay, folks, welcome to Sunday Night Stock Charts Live. The microphone would help. Welcome to another Sunday evening. Thanks for joining in. I hope everybody is safe and your families. I hope all the best to them. And let's see who do we have. Tommy. Hey, Tommy. Franklin. Hello, sir. As always. Oliver. Hello. God bless you, my friend. Thank you. Eric, I got your symbol requests. We're going to go over those. Chuck, hello. How are you doing? Okay, so we have some people still. Trader, hello. Pat, hello, sir. We have some people still filtering in here. So as people populate, let's take a couple of moments. We'll take a look at how we're opening up this evening. And we'll begin with what I normally like to begin with, and that's with the currency market. Hey, Denny, RL, welcome. TA, Nicholas, hello. Will, hello. Trader, what up? What up? Great name. All right. Let's begin with the dollar. The dollar is up. The dollar we need to keep an eye on. These are 4-hour charts that we're going to be looking at current, unless I say otherwise. The dollar we need to keep an eye on. We like to trade commodities, but the strength in the U.S. dollar could pose a little bit of a problem for us. So I mentioned this over the weekend on Best Stock Charts. I mentioned it with members on the week ahead commentary. And we're going to keep an eye on the dollar, and let's see how it's impacting commodity prices at current. Trader Isaac, yes, thank you very much. Kat, hello. If I could ask you to please smash that like button, I'd appreciate it very, very much. Thank you for reminding me. I always forget. High-fiving 50. Hello, Bob. First time here. Welcome aboard. Thank you for being here. Kevin, hello. Bob, can you look at TLT? Yeah, we'll take a look at TLT. All right, cool. Safe in Long Island. You know what? It's crazy here. I don't see Sam on yet from Northern Italy. I think he's over the hump somewhat, but I think we're just approaching where Sam was only last week, the week before. So it's crazy. It's crazy. So let's continue on with commodities. Yeah, it's a good group so far. 44 in so far, only a couple minutes in. What do we got? Let's take a look at oil. Oil is going to be a big topic this week. We have an OPEC meeting. And I'll tell you, I want everybody to think about the coincidence of where we're at. Look at oil. Nice rip last week, pulling back. We're back. We're down nearly 8.75% on the session. You know, you go back to September as we scroll through these and see how we're opening up, and then we'll let things level out. We'll go to some other charts. We'll do some chart requests. We'll check out the headlines. Then we'll come back after things have settled down some. We have more people that have joined in. And you go back to September. What happened in September? You had the Federal Reserve in the repo market. You had the president with the impeachment, completely distracted from everything. Then you had the CCP virus, the Communist Chinese virus, which is being lied about by our good friends over in Beijing. And we have gold up slightly, now down slightly. And then you had the torpedo below the waterline where you had the Russians walk out on a Saudi deal for an oil bargain. And that sent oil plummeting. And you think about all these coincidences happening all at once. And it makes you wonder, do I really believe in coincidences? Or is this just the opportunity to take down, unfortunately, a sleeping giant, a distracted giant? Let's check out silver. We're up a bip. We're still looking good here. Okay, let's take a look at Eric. I know you wanted to take a look at Nat Gas. We'll take a look at Nat Gas in the pre-market anyway, or the evening session. Where I just had it up here. Nat Gas, wrong button. All right, so Nat Gas, very, 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 very nice price action here on Nat Gas. But you have to wonder, this is where it really becomes critical. Excuse me, I need my coffee. You have to wonder whether or not we're going to get another head fake here on Nat Gas. You've seen breakouts above this upper band of resistance, only to fail before. So what becomes critical, and this is what I always like to profess, is that you need to wait for a retest of the breakout point. And do we hold? If we hold, well, then we'll take a look at the UGAZ or the UNG going into the trading week. Let's look at some questions here. Talks between Russia and Saudi postponed. I didn't hear that. But the OPEC meeting, I believe, is still on, and the Russians aren't a part of OPEC. I see many people are now growing, watching. A bit, yeah, it's a good group. We're approaching 60 at current, 26 likes. Thank you very much. Thank you. Thanks for all. You're very welcome. RL, millions of cell phones gone, dead in China. I heard that. It's like 21 million phone lines. But I heard a counter argument to that is that you have many families with multiple phone lines, and plus you have a transition over to 5G, which accounts for some of that. You know what? It sounds good. You never know, but that's a heck of a lot of people dead. If that's the argument that's being made, I mean, wow. Newmont, is it a good gold mining stock? We'll take a look at the chart. Where can I check futures prices for individual stock? You really need to wait until tomorrow morning. The individual stocks begin to trade, and it's very, very thin at around, I think it's around 4 a.m., around there. So we watch them, but it's a very, very thin market. I can't even trade them on my platforms. I have 3 platforms I trade off of, and I can't trade until 7 a.m. Eastern Standard Time. So, but they do trade out there. Your institutions are out there playing with them. All right, let's get back to the charts. Nat Gas, again, I want to wait. They postponed it. That's official until Thursday. Okay. That's why you're seeing a pullback in oil. That makes sense. So, thank you for that. Appreciate it. Watch for a pullback here on Nat Gas. It looks really, really good, but we've been here before. We don't want to get faked out. And Nat Gas is a master at faking everyone out. And you really need to take a look at the weekly chart to identify where we're at current. And you could see that we're building a base here on a weekly basis. No doubt about it. The bias is still to the downside. We did put in a new weekly high last week. Now this week we're flirting with a breakout. I see no rush at current. It's Sunday night. I mean, we have a whole week to go here. Let's see whether or not we trade above this resistance level. If we do, then we could entertain putting on a trade. No rush here. Let's go back to the 4-hour charts. Let's check out the equity futures. The S&P's up strong, 1.25% and rising. We're at resistance. Keep an eye on this. I would not chase this market tomorrow morning. The small caps, they're up big, over a percentage point. Remember what these institutions want. They want liquidity. They want to get everybody excited. Go chasing stocks. Let's check out Bitcoin. Bitcoin catching a bid here. I want to go back to gold really quick because that was indecisive earlier. Now gold is down further. I went into the weekend a little bit cautious about gold. I'm worried about, you saw this back in 2008, immediately after the bear collapse, the Lehman collapse, they signed off on TARP. You saw a spike in the US dollar and deflation, not inflation. And you saw gold and the miners pull back. I'm still worried a bit about deflation at current because I spent a lot of time over the weekend thinking about the ramifications of what we're witnessing right now. It's truly historical. It's just, I pulled up some headlines. I'm going to walk everyone through my thought process of where, you know what, let's do it now. I'm teasing it here. We'll come back to these futures in a moment. I want to go over the economic data coming out this week. So here's where we're at current in this curve, right? China well in advance of us because they had a really good head start on us. God forbid they were ever to tell the rest of the world that you had a tsunami coming our way. God forbid they did the right thing. The only other country you could trust that's behind them, because you can't believe the communist Chinese, you need to take a look at the South Koreans. They appear to have managed this very, very well. And here's where we're at. Believe it or not, we're behind the UK. I guess it's because of our case count. And the UK still hasn't even, unless they've changed it, they still haven't even closed their airports. So I don't know how we're behind the UK. Italy is approaching the top of that curve. Thank God. I know a lot of devastation over there. Spain, same deal. But we have a long way to go here before we're over that hump. And the Chinese are very close to the end of it, if you believe their numbers. The Koreans, I believe, are they're telling the truth, and they're probably in the right spot here. But we have a long way to go, right? So we're in the middle of this tsunami of horrible, horrible news. And we need to think about what the outcome is going to be. What's going to happen after this? What are the impacts on global trade moving forward? We haven't even had that conversation yet. OPEC, more indecision. Oil could be crashing down below $10 per barrel or not. But this is still a concern that the markets are having. This is not good for the fracking sector. It's a negative. Even if you have $20, $30 per barrel oil, it's a negative for the fracking sector. We cannot. Very few companies out there in the U.S. market can make money. Therefore, the fracking sector here in the United States is in a lot of trouble. And therefore, the junk bond market is in a lot of trouble because they financed the frackers. So problems continue longer term. When we come out of this, and we're going to shake our heads and we're going to say, what the heck just hit us, and how do we avoid it happening again? Let's take a look at the damage that's been done. And this guy was fired. He's a carrier captain, but we have an aircraft carrier captain who has COVID-19. You have the Prime Minister of Great Britain admitted to the hospital. You have Goldman Sachs, which is now contradicting Morgan Stanley, and they're saying that we're not going to return to pre-crisis growth until 2023. And rarely do I quote these banks, but we have to try to pulse check what the expectations are for the future against something. Morgan Stanley saying end of 2021. You have Goldman out 2023. I think they're both just taking a guess at current. And lastly, I think that this is going to be the real deal. You're going to see a massive switch of, it's not going to be law at current, but at some point in time, in the very, very near future, U.S. manufacturers are going to have to say, Either we could do it now or we could wait for legislation to say we need to pull manufacturing out of, at least for sensitive areas, medical supplies in particular. First one off the top of my head. They have a shortage of Tylenol, other medicines at current. Why? Because they're produced over in China. There's going to be a massive shift away from China. And there's a new Cold War on. I don't think that they get it yet. I think that they're in the process of thinking they're able to rewrite history at current and pull the wool over our eyes. I don't think that they're going to be able to. I think that they have awoken a sleeping giant, just as the Japanese did during Pearl Harbor. And we really need to start taking a look at that Rust Belt from Cincinnati up to Buffalo. What do? Does the president say, listen, any company that goes into the old Rust Belt, they don't pay taxes, corporate taxes for 30 years? Whatever it takes, they need to rebuild that entire infrastructure and get us back up and running as a manufacturing hub. I don't know what it's going to take. I'm not that smart. But it's a must-have. You got to have it. So I do believe that we have other countries out there, Vietnam, Malaysia, countries like that are going to benefit dramatically. But I think ultimately, out of this nightmare, you're going to see a manufacturing renaissance here in the United States to a certain extent. I don't believe that we're going to be going back and making textiles again. There's just not enough margins in it. But certain products, they're going to have to make here. So I'm trying to find silver lining, lack of a better word. Let's take a look at the economic data. I mean, from last week, it was just horrible. I hate to even look at it. But the problem is that this week, with the weekly jobless claims, it's going to be horrific this week. So I think it's going to be worse than last week. So last week you had ADP, 27,000 job losses versus a prior gain of 179,000. Our PMI data, negative. The manufacturing, ISM manufacturing index, negative. Any number, these two metrics below 50 is a sign of contraction. And the prior read, this is before, think about it. This is before the CCP virus. We were already negative on the manufacturing numbers. We were already weak when this hit. So I would expect that this number is only going to get worse. And I'm not hoping for it. I'm really not hoping for it. But we can't turn a blind eye to this. So while it's great to see the futures up at current, I can't get all excited because all I'm looking at is not the daily chart. I don't care about the daily chart. I care about, this is the Dow Jones. This is what I care about. Right? Last week's price action was absolutely horrible. And the probability of new lower lows, whether it be this week or next week, is very strong. We can't ignore the charts. Take a look at the volume last week. It simply can't be ignored. So while it's great to see, I want to be excited here. I really, really do. S&P 500 up over a percentage point. I don't think it's going to hold, folks. I want it to. But what we're looking at is just we don't know what we don't know yet about how this economy is going to react. And to get net long, or as the talking heads like to say now, dollar cost averaging in. I mean, I think even that, I'm a big believer in dollar cost averaging, but heck, we're just at the beginning of this. We've already had a big bear market rally, and I think that in all probability, we're going to roll over here. Let's go back to the economic data. So last week, construction spending, it actually grew. This has got to be a lagging number. Yeah, this is from February. So that's not even representative of post-CCP virus. Jobless claims. I mean, this just hurts to look at. 6.6 million. Non-farm payrolls, 701,000 versus a prior read of 214,000 jobs gained. Unemployment rate, 4.4%. The unemployment rate's not going to get revised until next month. And we're not going to get non-farm payrolls until next month as well. But very, very scary numbers here. And what we have coming out this week, of course, I think the FOMC minutes, they're not going to mean anything this week. It's just going to be a write-off. It's going to be a push. The producer price index is going to be interesting because it'll show whether or not we have pricing pressure at the producer level. Do we have inflation or do we have deflation or nothing's changed? It's quite possible. So we'll be looking at that. The CPI, that's a consumer price index. That's inflation at the consumer level. But the weekly jobless claims, usually it just gets looked over. I think this time around, people are going to be looking at the weekly jobless claims under a microscope. And there's really not much to analyze. You're simply taking a look at unemployment applications, and it doesn't look good. And my heart, sympathies go out to everybody affected by this. I mean, it's horrible. I have a bunch of people I know in the entertainment industry that they're a married couple, they were laid off, same day, laid off. So absolutely horrible. Great people, absolutely horrible. Let's take a look at some chart requests here. TA, I know you're on. You wanted Zoom. He tripped me up yesterday. I thought he was asking me, sent me an email. I hope you don't mind me telling the story. I'm the one that's embarrassed. He sends me an email, and all he wanted me to do is review the chart of Zoom. And I thought he wanted me to broadcast using Zoom. And I'm like, wow, what am I missing about Zoom? And he replies back to me, laughing, that, no, I wanted you to just take a look at the chart, idiot. So we got a laugh out of it. All right, so Zoom. I don't like the chart. I know it's, I took a look at this last night after we had the email exchange, and I did reply back to TA that I didn't like the fact that we had very close to an outside reversal week last week. We didn't take out the prior week's highs, but we did have a bearish week last week. We did bounce off of support at 114.55. Let's take a quick peek at the monthly chart so I can get a feel. Normally I go to that chart first, but there's not a lot of data here, which is why I skipped it. So that 114.55 mark is really critical support. And I would argue that I would get really nervous about us retesting that support level if we move below 122.05. That marked the highs of February. Daily chart. And folks, this is TrendSpider. They're one of our sponsors. There's going to be a link below. You use CT25Z as your discount code, 25% off if you want it. All right, so what I'd be looking for here on Zoom. It looks like despite the fact that we had a rough week last week, we were able to, on Friday, to bounce back. And we were able to close. This is not really a clean line here. Let me change this. Let's redo that. That's better. Let's just say we close at resistance. It appears as though we close slightly above it. I'd rather be conservative here. If we gap up higher, Monday, Tuesday, watch for the pullback and a retest of either A. As a matter of fact, let's create some alerts here. If we touch or bounce, maybe we have a long on our hands. ZM. We'll keep it active for the week. And I just want to check out the VWAP. They use, it's called raindrop charting on TrendSpider to see how we close out the day on Friday. And it wasn't bad. And for those not familiar with raindrop charting, the left side of the candlestick, this is a mixture of candlestick charting and VWAP, volume weighted moving average. And the left side represents the morning price action. The right side represents the afternoon price action. And what you want to see ideally is what we saw on Friday, which was what I like to call a pregnant green candlestick. If you're bullish, if you're bearish, you want the exact opposite, like you saw on Thursday, to be honest with you. But we did close with good volume into the closing minutes of trade. So good close on Friday, not a good week last week. So we have to defer to the weekly chart over the daily chart. So we're in a show me mode. Do we break out? Do we retest? The market's going to tell us. Let the chart dictate what we're going to do next. So we have our alerts set. I want to create another alert here at the, I don't care if we break through. I want to avoid it. Let's use, Zoom. And for those folks just joining in, may I ask you to please let's get rid of this CCP virus and smash that like button, please. That'll go a long way, I'm sure. I don't know. I tried. ZM. Retest of support. So what we're looking for is the market to send us a signal, right? We don't care if we gap up. That doesn't get me excited. What gets me excited is if we pull back and we hold support and then we begin to move up higher. So the market will dictate what we do with Zoom, if anything. Right now, it's purely a show me stock, and that's it. Let's go with DNBR. Eric, is that right? DNBR? No. We'll come back to that. Eric, if you're out there, can you just confirm that symbol that you put on the ticker cloud, please? We'll go to Oxy. You're welcome, TA. Let's go with a monthly chart here to get that feel of where we are from a higher level view. All right, so energy sector, one of the big players here. We do not have a new monthly low. That's a positive, right? So we're into the month of April, no new monthly low. There's no continuation breakdown yet, but still, it's early in the month. But that's a good thing. So we take our crayon out. We don't want to see that broken if we're bullish on the shares. Our Stokes on a monthly basis possibly becoming favorable. Higher low, possibly. Month isn't over yet. Weekly chart, we have 1 week in the books. I got to tell you, I get worried when I see a chart like this. So what you're looking at here are, whatever you want to call them, wicks, shadows, topping tails, puppy dogs. I don't care what you call them, but this is bearish price action. Despite the fact that we closed up, to me, this is more consistent with a bear flag setup. There you have it. So every time we rally, you're having sellers move in and they're fading that rally and they're keeping it up by the end of the week, but rarely do you get a breakout simply after you get all this topping action. Normally what you get is another flush and a retest of support. And if the support level holds, then they'll make another run at this resistance level. So I would take my crayon out here. There's my resistance at 15.09. Support at 8.23. My apologies. Daily chart. It's a pretty wide trading range here. All right, on a daily chart, they attempted to break it out on Friday. No bueno. It didn't happen. RSI is hooking up. Stochastics are looking really, really good here. You had a breakout to new higher highs. That's good stuff. So what's the play here? We need to close above this resistance level here at, let's call it 12. Let's call it 13 because it's declining, right? So it's going to change. And I want to see a breakthrough. Then I want to see a touch and a bounce. Now, I wouldn't get aggressively long because remember, we need to defer to the weekly chart over a daily chart because we know, because we did our analysis of the weekly chart, that we have sellers above. Where are those sellers? Right here at 15.09. I wouldn't get aggressively long of Oxy until you got to get this OPEC meeting out of the way. You need some visibility and you need to get a close above 15.09. I'm not saying you can't nibble down here. Sure, scratch the itch. But if you fail to hold this breakout point, I would stop out. Either keep it down below this breakout point or down below 10.45, which is, that marks a pretty big loss. I would keep a tight stop here. That's a tight stop on a percentage basis. So the chart is looking interesting. A lot of headline risk. You have price on oil that is hurting today. So let's see how this pans out. I would buy on strength and add on as we begin to overcome obstacles like the 15.09 mark. And on a weekly basis, you want to see it close, back to that weekly chart, you want to see it close above 15.09 because what you'll have at that point in time is you'll have a new trading channel which will have been formed. Here's your upper band here. Here's your lower band here. So as we pull back and retest that lower band, you can add and then either sell into resistance or if you're holding it longer term, hold it longer term, whatever your strategy is. What else do we have here? Was Eric? SNBR. Thank you. You got to avoid. We'll take a look at a daily chart to see whether or not there's a dead cat bounce to be had here. But from a monthly perspective, it's a broken stock. It's already broken down below the lows of March. Was there a news event here that you want to share? You're welcome. My pleasure. So our Stokes are very, very weak. Stokes are trading down below the 50 level. So in a situation like this is what I always teach. When you have your stochastics declining down below the 50 mark, rallies tend to fade. So if you get a rally here Monday, Tuesday, Wednesday, there's a very strong probability by Friday that rally will have faded. So be very, very careful here with this stock. Weekly chart. You can see that each time we've tried to rally, the rally fades. I think we go lower here. And I think one of the problems is that we don't have, let's flip over really quick. All right, so here's what we need to do. It's critical. Eric, you looking to buy this? What's your game plan here? Extreme oversold stock? RSI is where on a daily basis? Let's go back to it. RSI daily basis. We're not oversold enough yet. I think we can go down lower for that type of trade. If you're thinking about doing an extreme oversold trade, I wouldn't do that yet. I don't think it's oversold enough. But what we can do is look for potential bounces here. I would do a little bit of research. I go to Yahoo Finance or what have you, and I would take a look at what the short interest is. And if you have the potential for a multi-day short squeeze, then you want to come back to your, in this case, I'm using a quarterly chart to get as much data as possible. And let's save this. Because what matters most here, by far beyond anything, is where do I have support below? Where do I have buyers of like mind willing to step up to the plate and help support the shares? And the problem is that we're not there yet. We closed out the day on Friday at 1550. We closed down below support, but this is a quarterly chart. Maybe we'll bounce back for all I know. But at current, we're down below support. In all probability, before we bounce again, we're going to hit 1428. But I like, and this is pretty far away, I like this support level here at $11.97. It was support back in 2011. Prior to that, it was support back in 2005, 2004. It was resistance in 2003. A lot of history here. Daily chart. RSI, so what chart was I looking at? I was looking at the monthly chart. All right, so this does become interesting. All right, so RSI on a daily basis is about 17. All right, so it's interesting, but we need to hit, and it may seem like there's no way we're going down to these levels. Trust me, we're going down to these levels, one of the two. Either 1428, what was the opening price here? 1384 to 1197. These are the price points at which you'd want to begin entertaining opening up a long position. I wouldn't do it just yet because we may be looking at RSI on a daily basis with, a 16 handle. It can go lower. It can go lower. So it could easily, what's the price here? 55. You could see the low teens, if not single digit in this environment. Right? And don't forget, we don't know who's going to make it and who is not going to make it. So you really need to leave yourself a margin of error that is huge. So I would really take a look at keep it simple. You don't need some fancy program here. SNBR. Let's just do a quick analysis. This is what we usually do. All right, so I want to take a look at the statistics. First thing my eye is going to is debt. They have a lot of cash. They got a lot of, they have a little bit of cash, but they got a lot of debt here. A lot of debt. You really need to wait for these shares to come to you. Now, what else I want to look at here? My 3-month average daily volume is just shy of 600,000 shares. So this is good. So we have roughly 10 days worth of a potential short covering rally. So it makes it attractive. But the key is waiting for the shares to come down to you. This candlestick on Friday implies to me we're going lower. So I would wait here. I would wait, allow the shares to come down to those price. As a matter of fact, I like the trade, to be honest with you. So in all probability, what we're going to do is we'll be along with you on this one, Eric. So I like it. More to come. Okay. Let's what time do we have? 6:40. I'll go over a couple of more. Manoj, hey brother, ABT. Abbott Labs. Monthly chart first up. Nice consolidation here. We're holding 77.81, which is critical. Weekly chart, we managed to pop up and hold support last week. We closed off the highs of the week. What I'll be looking for here on RSI, you see how we broke out last week? I want to see a pullback and a retest. That means that we're probably going to have to pop 77.81, give or take a dime. Doesn't have to go exact down to 77.81, but we're going to want to see a pullback. We're going to want to see this support level hold. And if it holds and we get a retest on RSI that holds as well, then that 77.81 mark, again, within a couple of dimes, you don't have to be exact, and just put a stop loss right below it. So the risk versus reward is very favorable. Daily chart. Good price action Thursday, Friday. And it shrugged off this head fake. We had broken out, rolled over, broken down below support. There were buyers out there. Bid the shares back up, broke them out. We retested support on Friday. We may bounce around here for another couple of days. Again, we want to see a retest of the support level. I see no rush to go chasing the shares if they spike it up tomorrow. It'll come back. Allow the shares to come to you, especially in this market environment. INSG. Oh, you got it, Pat. Okay. So we're still at that resistance level that worries me, right? Because we're in an uptrend channel, very strong, no doubt about it. The problem is that we're right into resistance, and we have broken down below support on RSI. Weekly chart. A good week last week, but again, if you overlay monthly resistance levels here, they coincide with the weekly resistance level. So there's a lot of resistance above here. A lot. Now, if we close above last week's closing price, above this resistance level, call it, $7.20 thereabouts. What do we close on Friday? $7.05. Then I have a change of tune, right? Because we're not buying at a resistance level. Now we've broken out on a monthly basis. So that changes the story a little bit. But right now, this is a show me stock. It has to show us that it has the rocket fuel, the power to shrug off what I believe to be a market that's probably going to weaken up here again. And I'm going to go back to the futures before I log off here, which is why I want to leave myself 5 minutes to go through them again. I don't want to buy anything into resistance levels at current. So I would wait here. Let's see how we appear poised to close out the week. Do we close above this resistance level or do we fail? Daily chart. So they took a run at resistance. We're in the middle of a triangle formation. We took a run at resistance. We were rejected. We retested support on Thursday. If nothing else, this stock has got moxie to it. We're looking for a breakout here. Ideally, forget about touch. Pat, any idea the short interest on INSG? Keep it active for a few days. Slow tonight. Come on, there we go. There you go, Pat. Let's take a look. A lot of shares. That's why there's such a struggle. You have let's call it, let's say it's 14 million divided by, let's call it 3 million average daily volume. Roughly a 5-day short covering potential here. You need to get that breakout though. You gotta see this alert triggered in the close above resistance at around, I think I said 720 earlier, 722, give or take. SPCE. I know you and Artie bought some of this last week, right, Pat? Let's go. I'm going to come back to the daily chart. Let's go over the monthly. There's not much data here. Weekly. All right, so I'm worried here, to be honest with you, Pat. We have a little bit of support below, but I'm not a fan of how we closed out the week last week with a bearish reversal bar. Daily chart. Now, what we may have here, and hopefully, because I think you're long. Yeah, you're long. Hopefully, what we get here is a wedge formation. We see a resolution to this to the upside. And I think it's possible. But I'd be worried if we begin to see a breakdown below support here. I would grow worried. That weekly, I have to defer always, right? What does the weekly chart tell me before a daily chart? That influences me most. We closed at the lows of the week last week, very close to it. So on a daily chart, I'm watching for a retest of support here at around $11 a share, 11.10, give or take. Let's see whether or not that holds. I like the RSI. Potential cup with handle formation here on RSI. Watch out for these Stokes that are declining. Mixed bag here. I'm just where I'm being overly cautious here. You've seen the futures gaining steam right now at current, right? We're nearing resistance. I'm worried about a market that spikes up hard tomorrow morning, and I'm worried about a fade of that rally. So please just be very, very careful here. I would just consider putting in a stop loss on SPCE. All right, what else do we have here? TCS. Yeah, I waited on TCS. What concerned me here, let's go to the, What concerned me on Friday afternoon was, let's go to because I wanted to. If we closed weak on Friday, I was going to lean into the short side. But what we saw was pressure on TECS in the final minutes. And when you take a look at the XLK, which is a technology sector, obviously you saw the inverse and you saw money move in. So that just told me, okay, get ready. They're probably going to try to spike this market on Monday morning. Let them spike it. Let's see whether or not we get a fade. If they fade on Monday, then we'll lean into the short side. So it's a watch and see market right now. But in the end, I talk about this all the time. And what we want to keep an eye out for is, folks, we're looking at a 4-hour chart. Let's bring this up first. The key is, I don't care if you're a member, not a member. I don't want to see people lose money. We've had a massive rally off the lows of March, and it's like a second opportunity not to lose money, right? We need to go into this trading week with our eyes wide open. What is the weekly chart telling us? And it's telling us, I'm on the wrong chart list. It's telling us on a weekly basis that we have storm clouds out there, and to think that we are done going down in this market is crazy. It's crazy. Take a look at this price action last week. It's a bearish reversal bar. We were higher. They rallied it early last week. What did they do? They sold into it. The prior week, they rallied it early in the week. What did they do? They sold into it. What makes you think that they're not going to do the same thing again this week? These guys know what's coming. We're probably going lower here. So if the small investor can provide liquidity early in the week, they're going to take it because they know a liquidity squeeze is going to come again. And the big institutional players, they're going to take advantage of any liquidity early on before we begin to roll over. All right, we only have a couple more minutes to go here. I'm going to go back to the futures action. Let's see if I have a couple of... All right. I'll go over IYR. Isn't that a construction ETF? If memory serves me. Oh, it's real estate. I know it has something to do with real estate. Hate it. Despise it. I mean, this is what I'm talking about, folks. I mean, if you're looking to short it, I'm on your side. I think that, we have some serious problems here. The market sent a host of warnings last week, and it's telling you $72 per share is a ceiling. Lower than that, 68.52. Lower than that, 62.12. Lower than that, 63.55. We break down below 63.55. This coming week, in all probability, we're taking out the lows of March. I would avoid. Unless you're thinking about shorting. I think I read somebody was talking about shorting REITs, and that probably is what you meant. One's Blackstone. Okay. Let's take a look at REM. I'm not going to save this chart. REM. We'll go back to the futures. iShares mortgage real estate capped. It's already taken out the March lows. $12.37 on a closing basis. Low $13.83. We haven't taken out the intra-month lows of March yet, but I think we're going to. Daily chart really quick. I think we're very oversold here. We were. We're rolling over again. Can't touch it. Some may say, it's got RSI 30. Isn't that a buy? No way. No way. Avoid it. Unless you're shorting it. I don't know if I would short it with RSI below 30. But I think that the path of least resistance is obviously to the downside here. So I would be very, very careful. Let's circle back. And you can already see they have the S&P 500 back down below support here. I bet you they fade this tomorrow. Russell 2000 fading. Still up 0.75 of a percentage point. Let's take a look at the dollar. Dollar's still holding in there, very strong. Monthly breakout in the dollar. Last month. Crude prices coming off the lows, but still down 7.5%. Copper. Rounding top. Yeah, you would love to see your copper prices firm up here. But I think that we're going to roll over here. We're going to break. Gold. Gold is off the lows, holding in there. Silver. Nice consolidation here. We're long of silver. But I'm nervous about a potential bout of deflation. Not that gold and silver can't go up during deflation. During the beginning of the Great Depression, we had deflation, but you also saw a rise in gold. Gold did not go down. It rose, but not as much as you would see in a stagflationary environment, meaning stagnant growth with rising inflation. So we're in a trading range. Nat gas. This is going to be an interesting one for the coming week. We need to see a pullback and a retest of 1.59. 1.56 will do. And platinum was on a tear. It's looking good. We're up over 0.5 percentage point at current. Platinum still looking good. Cup with handle formation here. Here's your cup. Downward sloping handle. We're beginning to break out now. 4-hour chart. Palladium. Inverted head and shoulders setup. Left shoulder, head, right shoulder. I would use this as my neckline. 2338 on Palladium. Then we'll probably take a run at the all-time highs. Bonds. How dare I not go over bonds? Oh, somebody wanted me to take a look at the TLT. We're going to take a look at that. I'm nervous about the TLT. We're short of bonds right now. Only on spec. Because I just get an eerie feeling that we're going to have other countries dumping bonds into the Federal Reserve. Because we're bankrupt. And we are breaking down out of this wedge formation. Lower highs on RSI. Let's go to the TLT. And folks, while I'm bringing this up, if you haven't already done so, if I could ask you to please subscribe. Be that 2,000th subscriber. I'm 20 away or thereabouts. And if you could please hit that like button, share with a friend, leave a comment below. I'll definitely get back to you. What else do we have here? TLT. That is the Invesco. I already have this annotated. All right, so here's the weekly chart of, let's get rid of S&P 500 overlay. Below, update this, clean it up a little bit. All right, so we've had a heck of a run here. But I'm worried. You saw some selling on a weekly basis. Daily chart. You could see that we're in a wedge formation. I went over this with members yesterday, that we saw a bearish reversal bar on the 30th. Then it broke down on the 31st. Then they gapped it back up above support. But we're seeing filled candlesticks, a lot of indecision. Nobody really wants to commit anymore. And it's like the Federal Reserve is the buyer of last resort, and people are just selling into them. And the Federal Reserve is paying a premium right now for our bonds. It's scary. So I don't like the TLT. I don't like it at all. So I'm not looking to short anymore yet until such time as we break support. And with that, folks, I want to say, everyone, thank you very, very much for joining in. And again, please hit that like button, subscribe button, and everybody have a profitable trading week. And please be safe, okay? God bless. Talk to you soon.